Up next, the information you need to beat the stock market. And these days, what a market on the edge. Stocks flirting with disaster Monday and Tuesday. But then an unexpected midweek rally saves the day. So where does it go from here? We'll ask the bulls and bears. And the checks are on their way. You may even have cashed yours already. But now that you've got the money, what do you do with it? Your tax rebate, a shopping list of stocks for you. All that plus the chart man and the stocks you just got to get rid of. But first this.
Good morning, everyone. I'm Donna Fiducia. There could be a new round of trouble for boxer Mike Tyson. A woman from California says Tyson assaulted and raped her earlier this month. Tyson and his lawyers deny the charge and say they'll cooperate as investigators look into the claims. No charges have been filed. Tyson did spend more than 3 years behind bars for a '92 rape conviction. Bass guitarist Leon Wilkeson is dead. Wilkeson was a founding member of the rock band Lynyrd Skynyrd. He survived a plane crash in 1977 that did kill other band members. Wilkeson died in his sleep. He was 49 years old. An amazing rescue along the U.S.-Canadian border. 2 people whose plane crashed into the crack of a glacier have been freed. A third, though, did die. They had been stuck in the Cathedral Glacier for over 2 weeks. Firefighters battling a massive blaze in Wyoming are not out of the woods yet, but some ritzy homes near the flames are. Crews rigged high-powered sprinkler systems and sprayed fire retardant on the homes, some of them worth more than $5 million. Forecasters expect high winds and dry heat today. And in Southern California, an out-of-control fire has burned 650 acres in San Bernardino National Forest. So far, no homes have been destroyed. That fire about 50% contained. And finally, forget about good, clean fun. These kids are getting downright dirty and not getting any heat from mom or dad for doing that. Splashing around for the annual Mighty Mud Mania contest in Scottsdale, Arizona. And I'll have another update at the top of the hour. Now stay tuned as we kick off our business block. It's Bulls and Bears with Brenda Butner as the business block begins here on the Fox News Channel. The market mavens have your money on their minds next. And again, this is a 2-hour business block beginning next right here on the most powerful name in news, the Fox News Channel. Stay with us.
Hi, everyone. I'm Brenda Butner. Welcome to Bulls and Bears. The market sidesteps a free fall, but just barely. What happens when the bell rings Monday morning? Let's find out in the trading pit. The Bulls and the Bears this week. In Washington, our chart man and columnist for TheStreet.com, Gary B. Smith. In Chicago, the director of stock research at Morningstar.com, Pat Dorsey. Here in New York, the chief investment strategist at Prime Charter, Scott Blyer, and founder and CEO of ChangeWave Investing, Toby Smith. Welcome to everybody. Well, what a market, huh? Are you getting whiplash just watching it? Big drops early in the week, then a surprise rally just as stocks looked ready to slide down out of control. Look at the week for the Dow. Monday, off 150 points. Tuesday, 183. But Wednesday, after dipping more than 80 points early in the day, the Bears turn tail. A rally kicks in, and the Dow gains 165 points on the day. Then, another bounce-back rally Thursday, finally ending the week with a tame 39-point loss. Toby Smith, the real question is, where's it going?
Hey, man, where's it going? It's going the same place.
That's all what it all comes down to.
It's doing the same thing it's done for the last month. It's going to do the same thing next month. It's short-term money is out there saying, you know, boy, it looks pretty cheap at 1,900. Ooh, it looks expensive at 23. We go through this trading. But I think the world has to figure out a new economic system. I call it bustonomics. And the idea is we got to figure out what happens when the world's biggest bubble blew up and when is this economy going to get going. We're starting to get little hints. And as we get hints, people get excited, but then the traders take the profits. So we have to get traders to want to own stock for longer than a day, and it's going to happen pretty soon.
Scott, you've been predicting a summer rally for a while.
Yes,
Summer's about midway through here. When's it coming? Are we in it?
Well, we called for a summer rally 2 weeks ago, and we're a little early. But this has been a market that is stuck. It continues to be stuck and will continue to be stuck with the trading range mentality. The market is sold out, basically. There are no real
So it's
huge
going to go
sellers
in
left.
between 2 points, back and forth for a while, and frustrate everybody.
Simply put, yes.
Okay. That's what we like to do here.
Now that we agree, that means we're totally wrong.
Right.
All right, Gary B., what do the charts say?
Well, I think the charts say that both Scott and Toby are wrong.
Simply put again.
I'm a straight man for him now.
I think the week was pretty predictable. You know, last week we talked about, we showed a chart of the Dow in a downtrend, and then it was near the top of the downtrend line. We kind of went down, we went back up, but we didn't quite, again, reach the old peaks. Then about Thursday and Friday, that rally failed, and we started going down again, particularly on the Dow. I think if we go below the lows we made in July, we go all the way back to 9,000. It's the same exact story.
Oh, okay,
it's the same exact story with the NASDAQ. We were in a downtrend. We were near the top of the downtrend. We went down early in the week. We popped back up a little, and then on Friday we were up like 7 points or something like that. To me, we're still in this downtrend, in this sideways congestion. I don't know if for sure we'll break support there, but I think if we do on the NASDAQ, we could go back down to 1,600, like I've been saying, which would be those April lows.
Okay, Pat, you weigh in here. Gary says the other guys are wrong. What do you say?
The bright side to all of this is that we're finally figuring out the second half recovery is not going to show up. And so companies are lowering their 2001 estimates. And what that's setting up is lower expectations. And once you've lowered expectations, it's a lot easier to beat them. And that's the bright side to all these nasty
Yeah, but then what
earnings
happens
reports
to
we've
the
been
stock
hearing.
market, though?
Yeah.
That you beat
What happens to the stock
expectations,
market?
so what if
Right
they're lower?
now, there are plenty of bargains out there.
Absolutely.
American Express, Humana, Sprint, all great companies to own for the next 3 to 4 years.
Yeah, but
if you're an investor and not a trader.
People keep buying these bargains like JDSU months ago, and they become less of bargains after a while.
Well, but I don't think that's the best example, Gary. I mean, the reality is, if you're an investor who is going to have money in the market for 5 years, when do you want to buy it? You want to buy at the top, or do you want to buy somewhere at the bottom?
At
You
least
have enough.
5 years, though. If you have money and you need it before 5 years, you keep it in cash?
Yeah, listen,
Wait a
entertainment as you know, or buying stocks as entertainment is through. Now you got to be an actual investor and say, boy, I'm buying for 2002 and 2003 earnings, and the longer this goes on, whether we even go to 1,600 or not, you're getting a great chance to be a big investor. But if you're putting lunch money in or next year's, home mortgage, you're making a big mistake.
How about
If you
this?
need the
How
money
about
in
this
5
for
years, it
reality?
shouldn't be going anywhere near
Hold
stock.
on, everybody. Okay, Scott, you got the floor.
How about this for reality? If you're in what used to be the high-flying tech sectors, you're finished. You're out. You're out of the ball game.
Right.
If you buy them here, you may or may not come back, but the rest of the market is a world of opportunity.
And in fact,
Yeah.
Pat, small caps, there's a rally going on.
Yeah, I mean, the small caps are 30% cheaper on average than the S&P 500. Look at Chemet. These guys make panel capacitors. They trade at about 7 times earnings. It's an incredibly cheap company with no debt. I mean, but nobody's ever heard of them, so nobody's buying them.
Gary, how are you making money in this market? Are you shorting? Is that what you're doing?
Well, yeah, I mean, Toby wanted the traders to stay more than a day. Sorry, Toby, I'm just gonna, take what the market's gonna give me. But here's the problem with this buying on the dip mentality, which is what I'm hearing from Pat and Toby. They keep saying, my gosh, there's all these great bargains. And say there's great bargains at NASDAQ 1,600. What if the NASDAQ goes to 1,000? What do they become? Doubly great bargains then?
Well, that means your Microsoft call went awry.
Yeah, I was going to say.
That's what's going to take NASDAQ down.
Wait, you're going to bring Microsoft up?
Absolutely.
A year to go.
It's a Dow stock. It's a Dow stock, Gary.
That's an eternity for you, Gary. All right, got to close up the trading pit for this week. But up next, you need to know when to buy, but you also need to know when to sell. The chart man with the stocks you should get rid of right now. Next on Bulls and Bears.
Bulls and Bears, brought to you by Fidelity Investments.
I hate thinking about money. So now that my paintings are starting to sell, I'm planning to put mine with Fidelity Investments.
We have something called the Fidelity Funds Manager Program.
Basically, they'll manage a portfolio of mutual funds for me, according to my goals. It'll be like autopilot for my investment. If I'm going to let anyone manage my portfolio of mutual funds, it's going to be Fidelity.
Leave all the work and the worry to us.
Let the people who know what they're doing do it.
Fidelity Funds Manager Program. To invest, call, click, or visit Fidelity.
1 part tulip. 2 parts French vanilla. Add 1 whitewash shutter. Mix 1 quart lazy afternoon. Stir in 1 cup sunshine and a pinch of fresh sand. Serves 1 for a family of 6. Introducing Swedish Home by Ethan Allen. All the ingredients you need to make an elegantly simple home.
I've got a client, a single woman who's 59 years old. She'd planned to retire at 62. I figured out that with a combination of annuities, she could do it 3 years sooner. To give somebody an extra 3 years of freedom to do whatever they want, that's a great feeling. You're in good hands with Allstate. Mine.
Skakel, Chambers, Dahmer, Smith, Gotti. Forget the headlines. This is the real story. The crime scene, the capture, the conviction. We explore the shocking and grisly crime. If you think you know the facts, you're dead wrong. Join us each week for Crime Wave, hosted by John Scott. Saturday, Russia says a plan for fewer arms is at hand. Can Bush trust Putin, or is the U.S. defense playing Russian roulette? Barnes and Kondracki are the Beltway boys this weekend.
Welcome back. Which stocks are must-sells? Let's ask the chart man. Gary and Pat are back. Pat, this segment was your idea, in fact. So what stock is a screaming sell? Not just a whispering one, but a screaming sell.
Well, I'm going to pick one here and hope I'm not wrong for the third time. It's a Krispy Kreme. And for the record, my previous 2 calls on this one have both been strikes. I was bearish on it in January at about 16 bucks, again in May at about 28 bucks, and the stock's at 33 now. So take my advice for what you will. The story here is exactly the same. Very strong fundamentals, but an absolutely absurd valuation. This company is growing very fast. The donuts are good. We've all had the donuts. But the profitability is also improving quite a lot as the company shifts from company-owned stores to franchise stores. When they had these stores open for a couple of years, they used the excess production capacity to make donuts for convenience stores and grocery stores. So it's a great use of working capital, keeps the returns on capital very high. But the valuation on this thing is a train wreck waiting to happen. The stock trades at 70 times calendar 2002 earnings. That's 3 times the average restaurant stock. And even if you give Krispy Kreme some credit for being better than the average restaurant stock, you assume it's going to grow 25% over the next 5 years and improve its profitability, you get a $15 share price, which is a long way from 33 bucks.
From 32. But again, the stock keeps going up.
It does, and it's mostly a short squeeze. The stock is a very high short position, and that's keeping it aloft, I think. I don't think anything else is.
Gary, does the chart say sell?
Not yet. I won't say that Pat is dead wrong on this, but he's closer to being right than anything else. You know, here's the chart of Krispy Kreme.
You could never say that, could you?
I hate to give in.
All right.
I have a star complex. The Krispy Kreme chart for the chart aficionados out there is kind of a classic head and shoulders chart. And you can really, what it is, you know, it has 1 peak and 2 kind of sub-peaks that are about equal. But, you know, people always look at head and shoulders charts and they kind of fear them, thinking, oh my gosh, the end is near. But really what you have to look for is just very clear support line. That's really where the shoulders are, if you will. And in the case of Krispy Kreme, the one shoulder is right at about $32, which ironically it's bounced off of late, you know, Thursday and Friday. I think it hit $32 exactly. I would say if Krispy Kreme closes hard below $32, say it closes Monday at $30, I certainly would get out of Krispy Kreme. I personally probably short Krispy Kreme, but I think it would probably be the time to sell. So I think Pat might be 1 day away if we get a bad down day of being right, and but right now you just never know. It might hold at 32 and go up to 50. So Pat, I think
it's the most I'll ever get from you, Gary.
Yes.
I'm close.
Yes, all right, Gary, your turn. You've been a bear for weeks now, so it shouldn't be too tough to find a stock you think's just gotta go. What'd you come up with?
Well, I like to look at stocks that have been strong, where people made a lot of money, but are starting to show signs of weakness. Here, we looked at Best Buy. Best Buy has had just an incredible run this year. It's had an incredible run the past few weeks. But it started late last week showing signs of weakness. By that, I mean it cracked its upward trend. Now, the good news for the people still long the stock is it went right back up to that uptrend line. Here's the problem. Now, come Monday morning, it's going to be right near that old high. I think it's going to have a heck of a time breaking through. I would probably take my gains off the table. If you think I'm full of it, at least take part of your gains off the table. I think Best Buy just became very risky. I think it sent a warning sign the middle of last week, and I think it now is a great time to take at least something. I'd probably take all of my Best Buy off the table right now.
All right, Pat, is it Best Buy or Best Sell?
Well, I'll agree with Gary. This is a very risky stock right here. The valuation has run up an incredible amount in the past 6 months. This is a very well-managed company. I mean, returns on invested capital are north of 40%, which is just incredible. Twice the sales per square foot of their chief rival, Circuit City, and very, very high inventory turns. In short, this company has everything you would want in a retailing stock. But recently, same-store sales have started to weaken as people have been buying fewer and fewer Palm Pilots and MP3 players and gadgets of that sort. But more importantly, most of this stock's valuation is based on second-half expectations, and that to hit the full-year numbers that Wall Street is currently estimating, this company has to grow its earnings 40% in the second half of the year. Earnings were down 25% in the first quarter of the year, just to give you some idea of how the weak economy is hurting them. At 31 times earnings, there's a lot of risk in this stock, and at the slightest hint that they're not going to make that aggressive 40% growth target, this thing is going south in a hurry.
Pat, not that I care or even would know, but when are the earnings coming out for Best Buy? Do you know?
They're actually on an odd quarter. Their fiscal year ends in February, so they reported their first quarter in just about a month ago. So they'll report again in August and September.
Okay.
All right, we'll be watching. Gary and Pat, thank you, and we'll see you both for predictions in a few minutes. But up next, what are you going to do with your rebate check? The Bulls and Bears say invest it, and they'll name names right after this.
Bulls and Bears is brought to you by Merrill Lynch Wealth Management, advice and personal financial planning to help simplify your life.
This is Joe, and this is Jim. Joe never developed a disciplined investment strategy with the Merrill Lynch financial advisor. Jim did. Joe never created a diversified portfolio to prevent him from overreacting to ups and downs in the market. Jim did. And now, even though he's never at a loss for ways to fill his day, Joe spends a lot of time wondering why he didn't do exactly what Jim did.
Morning, guys.
Hi. Hey, morning.
Like to see how your cereals stack up the total?
Sure.
To get the iron in 1 bowl of total, you'll have to eat 2 bowls of cornflakes. For folic acid, try 4 bowls.
That's a really big spoon.
Want zinc? 10 bowls for you.
What's so funny? Nothing.
Nice bowl.
Total has 100% of 11 vitamins and minerals in just 1 bowl.
We'll take the total, sure, and give Junior the check. What?
Total Raisin Bran, Total Cornflakes. 1 bowl, 100%.
It's the right thought with the wrong gift certificate. Next time, give the one that's good in millions of places, the American Express gift check. Order now at AmericanExpress.com. Gift checks come with a personalized card and envelope, so log on to AmericanExpress.com and send today. The American Express gift check. Instead of one place, it's good all over the place.
Hi, Billy Mays here for OxyClean, the stain specialist. Powered by the air you breathe, activated by the water that you and I drink. It's Mother Nature approved, then it's safe on your colored fabrics. OxyClean seeks out organic stains. It'll even take red wine and grape juice out of white carpeting. Make a paste, make it 10 times as powerful. It'll whiten your grout and get rid of your toughest stains. Soak your fabrics, even lace. It has the power of bleach without the damaging side effects of chlorine. Use it in your laundry, it'll make your whites whiter, your brights brighter. Call now and you'll receive a whopping 6-pound bucket of OxyClean for just $19.95. But if you call in the next 20 minutes, we'll also include a squirt bottle. a super chamois, and a bottle of our world-famous Orange Clean free. Here's how to order.
Call to order your 6-pound bucket of OxyClean for only $19.95. Call now and we'll include the Super Chamois Squirt Bottle and Orange Clean absolutely free. Call 1-800-429-3883. Call now.
Welcome back. No question about it. The check is nice, but the tax rebate won't get you rich on its own. How can you turn a few $100 into something bigger? Time to find out in the stock exchange. Scott and Toby are back, along with Bob Olstein of the Olstein Funds. Now, Bob was supposed to be here with us. Work with me on this one, okay? But he has spent 3 hours in horrible New York traffic, and he never got here. However, Bob feels so strongly about his tax rebate stock, he had to be a part of the segment via his cell phone. All right, Bob, now we know that's dedication to our show, so we're here too. Which stock should that rebate money go into?
Brenda, LSI Logic. Here's a company that caters to the storage, bandwidth, and internet market, build everything in with internet and networking. They're going through some tough times now. The company still has excess cash on its balance sheet. The cancellations have stopped. We think 2 years down the road, there's $2 plus in earnings. The stock's only selling at $20 a share. We value this company at $30 to $35 a share.
But all its customers are on life support.
That's exactly right, and that's why you're getting this price. This stock is down from $90 a share. The stock's selling at $20. Again, we think there's a 70% move to the stock over a 2-year period.
All right, guys, come on.
Well, Bob, God bless him. I mean, here he's, calling in from the road. He's so excited. Now, if Olstein loves this stock, what that means is it's going to go up. It's just going to go up in 2 years. Right. So the point is that put it on your watch list. If it drops another, 10%, Bob doesn't care because he'll buy more. Right. Buy it at $15, and then you'll make it double even quicker.
Do you like it?
But the stock is putting in what looks to be a really good intermediate term bottom, and it had a great day on Friday after reporting earnings. It may not get much cheaper, but this is a cheap stock on a relative basis.
All right, Toby, I know you're going to spend your check by taking us all out to one of those Tony restaurants you go to.
My name is Toby, not Tony.
Oh, excuse me. All right. So what's your stock?
Well, we certainly, if you're going to put your $600, you're going to put it into something that has a big upside, okay? Wind River Systems is a company that is essentially the Microsoft of what's known as embedded operating systems. It's systems that are inside chips in your car and everything else that you never see. They've been absolutely hammered. They sell for 2 times their cash flow, actually 2 times their sales, which is very cheap. Right. Certainly, long term, we think Wind River Systems is going to benefit also from the Windows XT and this Windows Net ecosystem that's just growing throughout the world, because you're going to have to connect with everything.
All right, guys, Bob, you want to weigh in on this one? You like it?
Toby, you've had no growth in this stock forever. It's been in the 60-cent range in earnings, down between 30 and 60. How do you justify a 30 multiple on a stock that's never shown any growth?
I'm glad you asked that. The growth comes from really related to the fact that now operating systems, they bought their competitor out, was the other thing they completed last year. So now, as you start to get twice and 3 times as many operating systems, you'll now start to get the earnings growth.
Scott, you like it?
The problem I see with this company is that it's in the most hated area of the market, or what is fast becoming the most hated area. It's already got over $1 billion in market cap. Your upside is definitely limited with this one, but it's a survivor.
All right. Scott, your stock?
Spanish Broadcasting System. It's a small cap name, just over $500 million in market value. They own Spanish-speaking radio stations. And I don't know if you know this, but the Latin American demographic is going to be the largest niche market in this country. Radio stations, I don't know if you know this, are doing very well. They are acquisition candidates, and we think this one will be as well. We think this is a double from here.
Wow, but you don't need a good ear for this. You need a strong stomach. I mean, this stock is volatile.
Well, actually, it's thin, and it's hard to buy a lot of, but the fact is that this happened to go public in the heady days of 1999 at $20. We think it can get back to $20.
Bob, do you like it?
The stock is an interesting franchise, but again, not cheap. It's 50 times earnings.
And Toby, quickly?
No.
Thank you. There we go. Simply put again. We do love that here. All right, gentlemen, thank you. That's the closing bell for Stock Exchange. But all the bulls and bears are coming back after this. And Planet of the Apes. Now, this is not just an excuse to show off this video of great movies, though it is fun to look at. But there really is a connection to Wall Street, I promise. You'll find out in predictions, which are up next.
Look at that. This market is just, I don't know that my retirement investments are right anymore.
I know, I was the same way. So I called a Fidelity retirement consultant.
Well, if you're feeling unsure, you may be spread too thin.
Well, I do have IRAs and 401ks everywhere.
Well, we can consolidate those with Rollover Express. If it's been a while, they could be misallocated. You can reinvest your retirement savings based on a plan we help you develop.
I just want to know if my retirement is on track.
Call. It's not hard.
To consolidate retirement savings with Rollover Express, call, click, or visit Fidelity.
A lounge chair has a great life until the storm comes, the acid rain, the dust and debris, the kids, then the harsh, hot sun. Clean away that grime, goo, and dirt. Spray on CLR Outdoor Furniture Cleaner. Wipe, then hose it off. It works on just about any kind of outdoor furniture. So bring back the good life with CLR Outdoor Furniture Cleaner.
Outdoor Furniture Cleaner is available at Target, Walgreens, Ace Hardware, True Value, Do It Best Centers, and other fine local retailers.
Craftsman has created a tool that's a real innovation and so easy to use. It's the Craftsman Easy Fire staple and nail gun only from Sears. With traditional staple guns, you put all the pressure on the back of the tool. This can cause kickback, so staples don't always go in flush. With the Easy Fire's forward action design, you use your arm and your body weight in a natural forward motion. The extra leverage dramatically reduces kickback, so staples go in flush. It's the only tool I need to finish the screen door. It's two tools in one. Just switch to brad nails to finish off the job. The Easy Fire has a built-in wire guide, and it's half the weight of traditional staple guns. The Craftsman Easy Fire staple and nail gun comes with 1,000 staples in 5 different sizes and 500 brad nails, all for only $19.99. Sears, the good life at a great price, guaranteed.
Have your Sears or other credit card ready and call 1-800-754-7711 to order your Craftsman Easy Fire staple and nail gun for just $19.99 plus shipping.
Saturdays, tax rebates enough to save the economy?
It's time to kill off some conventional wisdom.
Don't miss the next Forbes on Fox. Then NASDAQ taking a dive. Will it hit 1,000?
Well, don't make a move without Stock Smart.
Find out how to protect your assets on Cashin' In. This weekend, it pays to watch. Powerful business.
Oh, it's great to be on your show, Neil. I tell you, everybody on Capitol Hill gets their business news from Cavuto.
Fox means business. Your world with Neil Cavuto.
Welcome back. You know what's up. Predictions. All right, Gary B., you're up first.
All right, I'm going to have a multi-pronged prediction, a little storyline here. Planet of the Apes, floppo. Bananas, suffer. And as a result, the Dole drops 20% before Planet of the Apes is even out of the theater.
Hey, Gary, I know there's some monkey business going on with Dole, but hey, they make package. You're a house, dad. They make this packaged salad that's going off the charts. I think.
Yeah, but Toby, the thing's had a parabolic run the last few months. It's right near its old highs. I just think the thing is ready to come down. It looks like it's just it's ready to be. It's overbought.
I bet you didn't even like the first Planet of the Apes.
I love that movie.
Yeah, all right. Okay, Toby, you're up.
Well, listen, Scott, you called a nice run in biotech in May, and it sort of came down, and it's really hit the bottom of the trading truck. Does not sound like Gary here, but more importantly, there's real good news starting to come out. We had 4 or 5 weeks of just bad news from the FDA, and it was really just bad science that hit companies in a row. We have real good news coming out. I think biotech moves 20% from here.
Like Amgen, which just reported.
Yeah, what we're starting to see is that this logjam of FDA approvals is going to start breaking in September, and that's what drives it up.
All right, Scott, sorry, Scott, we got to take your next prediction.
Cult stock, Qualcomm, gets cut in half over the next year. It's way expensive. It caught an upgrade, went up $4 on Friday. It's way overpriced. It is a cult stock. It gets cut in half. It gets cut in half.
Can I weigh in on this one?
Please.
Scott is totally correct.
You say that so easily, too. Okay, Pat, hold on. We got to get to Pat, you guys. Don't forget about it.
First of all, Scott's absolutely right. Second of all, Enron down 40% this year, selling at 25 times earnings. Speculation's been wrung out of the stock. Decent buy here.
Well, Enron is very expensive for one real reason, is that it trades like it's a high-growing energy company. It's a trading desk. If they have a bad week, boom.
Okay, and boom, that's it for the show, too. Thanks to all of you. But we are just getting started because you get more for your money here on Fox News Channel's Weekend Business Block. In just a couple of seconds, Cavuto on Business with special guest Bob Guccione Jr. We hear from all points of view here on Fox, even about the stock market. Neil and Bob Guccione is a can't miss. Then David Asman hosts Forbes on Fox. Is Washington depending on us consumers to save the economy? Forbes says we are all in trouble if that's the case. And in 1 hour, Terry Keenan on Cashing In. Think the NASDAQ sinking all the way to 1,000 is impossible? You might want to tune in to this one. Plus, Terry and her panel answer your money mail. Thanks so much for joining us for this edition of Bulls and Bears. We'll see you here again next week. Until then, invest wisely. Neil Cavuto, right now.